Guys, welcome back. In today's video, we are talking about the secret behind the volume, how shorts are in trouble, the margin call requirements, and many more in this video. First, we're taking a look at this. Week 1, 195 million shares. Week 2, 236 million shares. Week 3, 195 million shares, which was only a 4 trading day. Week 4, 227 million shares. And then week 5, 287 million shares. 1.1 billion AMC shares traded so far in 2026. So bear in mind that we are off to an extreme volatile start to the year. We're seeing massive volume coming in for AMC. And even when you look at kind of the volume that's been going on recently and you compare it with just August last year, you can see a massive difference. We can see we've had already 2 days where volume has gone to 70 million plus, but in the past you really only saw 1 day out of, and you can see for the volume here, that came close to what we're averaging right now. And so the question is that right now on singular days, we're seeing volume on AMC today was 70 million. No news. Volume has been increasing over the last few weeks. Someone somewhere always knows something the public doesn't. What is going on? So clearly there must be something going on for AMC to experience such volume when no clear news has been given. What we've known so far is just how well AMC has obviously done throughout last year and what their plan is going into this year. But despite that, the news article is still only covering about the bankruptcy possibility for AMC and talking about how there are other stocks that are better than AMC. That's the constant media articles that we're seeing. We're not seeing any news to why we're suddenly attracting so much volume. So it must mean that something is obviously happening in the back. What we also know along with the volume is that obviously institutions are buying. What are they buying? Well, firstly, I want to bring to this particular post, which is from Michael Burry, who talked about GameStoppers. If you want to get rich on GME, if/when Ryan gives the signal on that merger Monday, meme like no one has memed before. So this is from Michael Burry. And obviously what we talked about is how GME wants to do a merger/acquisition, and Ryan Cohen has stated that this is unseen before and it's gonna change the whole industry, and it's his plan to take it to $100 billion in market cap. Michael Burry is someone who has been extremely bullish behind this, and he said a lot about this as well. And so what we're seeing is supposedly coming to this Monday, so the Monday that is coming, we're meant to be seeing potential news on this merger acquisition by GME. And what Michael Burry is saying is that this is going to be something that is going to bring immense volume. Now, recently, what we've looked at is how institutions, just like we talked about, firstly, have increased volume on AMC. Secondly, they also increased their volume on GME as well. We're seeing institutional ownership to go up for both AMC and GME. Now, the reason why I'm mentioning the two together, despite the fact that this is acquisition news for GME, is you have to understand if GME were to go to $100 billion in market cap, this would suppress the same short sellers that are shorting AMC. We've already talked about the mutual short sellers. We know companies like Citadel, like Virtue, are shorting both AMC and GME. Now, if their position are being affected because GME is going up in value, they will also have difficulties to suppress AMC because their margins, their collaterals are being taken away and being suppressed by GME. And so this is why we've said is that if GME were to go up first, AMC will follow along with it, and vice versa. If AMC were to go up, GME will follow along with it. And so it's why we talk about this is potentially why people are trying to stack up on AMC as well, because they realize if GME were to obviously go to 100 billion, this would easily allow AMC to go up in value as well. And we've already said there has been so much more synthetic shares being created for AMC than GME that when it comes to it, it's very likely that AMC's squeeze price is going to be immense. And so that's why potentially people are buying into AMC, not to mention how undervalued we are. Now, despite higher price and volume, AMC borrow rate now climbs to 0.9%, more shorting on top of short. So the reason why I find this interesting is because of the fact that we're seeing volume going up. We know the majority of these are buy orders, yet the price is going down. That's because the more buy orders you see, the more shorts these institutions have to create. And it feels like they're trying to suppress the price on purpose, because right now it seemingly looks like institutions want to buy more than ever before, but they want to buy AMC as cheaply as possible. So as they buy AMC, they want to make sure that their buys doesn't affect the price so that it goes up in price. They also want to make sure that they can short so they can keep the price not only at its current state, but even lower so that they can buy even more, whilst saying in the media about how AMC is bad to try and get retail to sell to make AMC a majority institutional owned stock. That is seemingly looking like their plan right now. And so that's why we're seeing all of this happening. You can even see 86.16% off exchange. This is something that we're seeing constantly. This was for the Friday, and this is only an hour and a half into the market. And a big reason for why we're seeing, these immense volume, you can see for the 5th, when it was still 84% later on the day, and then it was 34 million. And the big reason for why this is happening is because firstly, we have to realize is that the AMC 30-day average is 73%, which sometimes remember this is the 30-day average, which sometimes we're seeing it going to 80%. Now, the reason for this, this remains abnormally elevated, driven by heavy retail order flow, often rooted off exchange, payment for order flow arrangement. And that's the key thing we got to take away from this. Firstly, the reason and the way they're trying to suppress this is by routing retail orders. And a big reason for this is because retail orders are majority buy orders. So they realized how powerful we can be. They realized how the buy orders is able to impact the price. So they're obviously trying to prevent this. And this is why we are never able to see the real price discovery, because it affects it. When you are hiding what the retail want, you can't obviously get real value, especially the fact that AMC is a retail owned stock. It should be impacted by the sentiment of the retail as opposed to the institutions who are stuck in these heavy short positions. Furthermore, you can see today with roughly 86% dark pool abuse, imagine no dark pools or perhaps only 50%. Because even at 50%, you have to realize AMC's dark pool volume is hidden away so much volume. On the 6th, 1 hour 30 in, 80%, that was already hiding 17.7 million volume. Bear in mind, NYSE only saw 760,000. So you can see there was a 17 million share difference, and that was only an hour and a half in a day. For the 5th, what we saw was 34.6 million as opposed to the 1.8 million that hit NYSE. So this is why we've said that even only 50%, these are still millions of shares that could have affected the price of the market. And even right now, they're still having a hard time holding it down, because what we saw, and if you look at the history, the volume picked up around the 9th of January. You can see how the average volume for these few days is just way higher than before. And it picked up from the 9th of January. And when we saw, and you can see the kind of the coincidence in this, when we saw the volume pick up at the first time, that's when we saw AMC go up in value. And this is because we caught them, kind of by surprise. So they didn't know that all of a sudden volume was going to come in. And because they didn't know they had to suppress it, is why we saw on a volume like this, we saw AMC go up 13%. The same for the next day as well. We saw a very high percent of volume of 61%, or 61 million. But then literally, and I've shown this to people with data as well, the dark pool volume after these 2 days, so these 2 days were both 60%. Then, as we saw these two volume days come in, as we saw the candles go green, by the 13th, the dark pool volume suddenly exploded to 70+% going into that 80%. And that's when we saw this red day happening. So tell me how that is possible when dark pool at 60% and volume coming in allows us to come in, allows us to go up, and with the same volume, but then suddenly at 70%, we're seeing a red candle. And that's what we talked about with the suppression that is obviously happening, and why we should obviously be way higher than this. But then even so, as they go up to 86%, as they still do this, they try and constantly do this, we still have these green days that are coming in. We still have the ability to fight back. because they're failing to suppress because of all the liquidity problem that they are having. Firstly, we're looking at 0 shares available to borrow. It's what we talked about with how they're double down on increasing the synthetics, the tokenization of AMC. But not only that, a big part for this is if we take a look at this right now. Now, bear in mind that this is for CFTC, but on these legacy swap, the very fact they have to mention this shows you about what is happening in general, where Morgan Stanley's legacy swap retains their status as legacy swaps for any counterparties subject to the CFTC's uncleared swap margin requirement and thus remain exempt from them. Now, it's essentially talking about that these swaps that they have created a long time ago are now facing, if under the new margin rules, will be facing liquidation. But because they created in the past, they are able to find loopholes that said it should be subject to the margin requirement that was created for back then. So what we are already seeing is the margin requirement issues already happening. And you can see these from these swaps, not to mention, these are a small percentage to what we have uncovered in the past. Furthermore, what we're looking at here, and I'm curious to see if other people have the same issue as well, is talking about how on TOS, they are showing 107 million, but the actual reported volume is only 42 million. Now, this is done by looking at the order books. So I'm curious, I just want to quickly go over this and curious to see if anyone else is seeing this as well. If so, comment down below. Now, another reason for why I think the shorts are in trouble and why we're seeing them suddenly increase in AMC and GME is because Michael Burry has probably had a massive influential thing on Ryan Cohen, especially because of how healthy of a cash pile GME has. Recently, Michael Burry talked about how he's referring to what happened during the Big Short, what he's obviously famous for, and talking about how at these discounted times in which we've seen how the market were dropping recently, how GME can deploy a large amount of capital to obviously captivate from this opportunity. And he talks about the GME potential targets and plan for $100 billion. And so this is obviously what he thinks is possible. And it's why we've said that shorts are trying to pile in, institutions are trying to pile in, because they realize that we actually have the ability to do a lot more than they think. More on top of this is that right now we're going to be seeing a potential massive rotation in capital. You can see hedge funds hit by worst days in month amid AI fueled rotation, where we've seen a lot of these AI tech stocks obviously fall a lot in volume and value, and these hedge funds are all taking damages from it. Now, this would be the time for companies like AMC and GME to obviously turn around, because people are trying to look for safer investments that still provide a good return. You can also see from Bitcoin as well, where we saw the first ever daily decline of over $10,000. Not even a record 19.5 billion liquidation on October 10th came close today. It appears that someone big was liquidated. It's further clarifying about our collateral calls. And you have to realize is that we were seeing on a day about how 350 billion were wiped out from the crypto market. That's just something that is crazy. And you can imagine how much collateral was lost. Furthermore, if you take a look at HYMC is worth hundreds of billions in market cap. It's currently 3 billion. Physical silver is a squeeze. Infinite AMC can't squeeze without a catalyst and a dividend, and I believe that catalyst is HYMC. Now, a big reason for what I think about HYMC is when you take a look at what's going on right now, considering that the Trump administration convened a critical minerals ministerial 2 days ago to game plan silver supply, we can only assume that President Trump is referring to the gold and silver market in 2026, where he talked about let the gains begin. So what we're looking at is just how there are still potential big focuses on silver and gold, and how that's going to allow the price to go up. And then not only that, what we're seeing is how silver physical deliveries at the COMEX just cost 4,000 contracts. And we're only 6 days into February. And then the reminder is that this is already roughly the total amount of silver physical delivery at the COMEX in the whole month of February 2025. So the demand is still there. And so for me, I believe that the silver price still has a lot more room to go, and is why I believe HYMC will go up with it as well. As always, none of this is financial advice, so do take our Instagram. So make sure to do your own due diligence research, and I'll catch you guys next time.